Decentralized finance. This has been a topic for quite some time, but is it ready for mainstream adoption? Can people actually get a mortgage or the brand new car that they've always wanted by taking a large loan using cryptocurrencies? Will the collateral be enough to cover the risks for the company offering you the loan? Is it really ready? Find out in this video. Hey, if this is the first time we're meeting, my name is Claudio and this is CryptoExchained, the channel where I do crypto news, reviews, tutorials, and interviews. So if you enjoyed this video, please hit that like button, click subscribe, and enable notifications to not miss the next video I upload that may interest you. This type of video is more aimed towards beginners in the space, people that are new to crypto and that don't know what decentralized finance is. Maybe they've heard of the term DeFi, but they would like some clear explanation as to what it actually means. If you've been in the crypto space for quite some time, maybe you'll be learning some things about it too, but you probably already know about this. So this video is targeted more for beginners, just to make you aware from the beginning. Now, we're going to be looking at this article, which I think is really well explained here. I'm not going to read through everything, but I will be talking through the points, and I'll also give my own kind of feedback on what the article actually says and on the certain points. Just to kind of reiterate what is the current use case for DeFi and what are the drawbacks at the moment and what we could expect. So in this article, we can see here DeFi is an ambitious attempt to decentralize core traditional financial use cases like trading, lending, investment, wealth management, payment, and insurance on the blockchain. Now, DeFi is based on decentralized applications, which stand for dApps, or protocols by running these dApps on a blockchain. It provides a peer-to-peer financial network like Lego building blocks. Every dApp can be combined with each other. Smart contracts work as connectors, comparable with perfectly specified APIs in the traditional systems. Now, I have done a video actually talking about oracles and what is the importance of smart contracts in Oracle, so do check that out. It was posted yesterday, so it's actually the recent video there. It should also pop up on the top right hand corner depending on which platform you're watching this on. Now, for the rise of DeFi, while the initiative to open finance is generally blockchain agnostic, it flourishes on more flexible blockchains, programmable smart contracts, as well as with a healthy developer base. Today, nearly all DeFi projects are being built on Ethereum, which is the second biggest blockchain out there, and cryptocurrency too, making it the standard default blockchain for many decentralized applications. Taking a look at the average data for November, Ethereum dominates the existing blockchains in amount of applications. Okay, so that is important to note here. Now, in a nutshell, other competitors for DeFi are currently far away, as they either lack a healthy developer base, for example IOST, or true decentralization, and thus the core benefits of the blockchain, for example EOS. Because apparently I've recently found out that with EOS you can actually, well, not you, but the developers can actually modify the smart contract. Okay, so it's not only upgradable in the sense that you need to deploy a new version of it, they can actually modify it. So this is actually a red flag. It's a concern with this project, yet many people still support it. I'm not sure why, maybe because they're early investors and they've made a lot of gains and they continue to believe in it. Who knows? It's the same as with anything else. Why do people support certain projects if they don't make any sense? Simply for the gains most of the time, right? Now, this raises the general question whether DeFi can also be replicated on the most famous blockchain protocol. Now, contrary to popular belief, dApps are indeed possible on Bitcoin, but programming them is much more complex. So hence why we don't actually have a DeFi initiative with Bitcoin, at least not right now. Now, by design, Bitcoin emphasizes security, something that is very important in the financial infrastructure. Hence, Bitcoin might be suited for a robust, albeit notably smaller DeFi ecosystem. And Bitcoin's most successful DeFi application is so far the Lightning Network, which, if you haven't heard of, the Lightning Network basically is a second layer protocol that has been developed over the past few years and is based on a technology called state channels. Now, the Lightning Network allows for ultra fast and cheap payments that has seen an impressive growth in 2019 with already more than 6,000 active users and $6.2 million locked in the network. So basically, just to keep this short, the Lightning Network's protocol helps Bitcoin transactions to be much more faster, and they're usually done in Satoshi, which with Bitcoin is the same, right? You're trading and you're exchanging, you're doing these transactions in Satoshi, but with the Lightning Network, these transactions are actually very, very fast. we're talking 1 second, right? This is how long it takes you to receive a transaction from somebody across the world. So that is a very important aspect of the Lightning Network protocol. Now, while it may be difficult to determine which protocols and applications will get the most usage long term, currently the advanced decentralization, programmatic flexibility, and the enthusiastic developer base gives Ethereum the lead. Now, as a result, Ethereum-based apps will be the focus of this report. In this case, DeFi projects now account for a substantial share of Ethereum's sprawling ecosystem. Now, what's interesting here is that they're not actually talking about, because they're focusing more on Ethereum in this example, we do have projects like Kava, which I have reviewed on this channel, that are focusing solely on DeFi, and that is important to keep in mind. They do have Ripple backing them. They received the funding from Ripple. So the thing is, like when projects like these focus only on DeFi, then I do believe that they have more of a chance to grow, especially if they do something special, right? If they produce this specific use case, this specific functionality or feature that maybe Ethereum hasn't thought of, because Ethereum isn't actually focusing only on DeFi, right? So that's what we have to keep in mind, is that they're working on a variety of different things. So hence why they can't do everything at the same time. When you try to be a jack of all trades, sometimes it just doesn't work out for you. So it is better to just focus on one specific technology and try to improve that and make the best out of it so people can adopt it, right? So hence why Kava, in my personal opinion, I think is doing really well from this aspect with DeFi and with the support from Ripple, because they've got funding, although many people would argue against Ripple being centralized and things like that, right? So you will get these kind of people too. Now, DeFi projects now account for a substantial share of Ethereum's sprawling ecosystem, as I was saying, and particularly with respect to Ethereum locked and smart contracts, which is often used as a measure for growth in the DeFi sector, the amount of Ethereum locked is collectively worth over 680 million, roughly 2.5 million Ethereum in terms of volume locked. MakerDAO dominates across the major applications with Synthetics, Compound, Instadap, Uniswap, etc. However, over the past few months, MakerDAO's dominance started to drop, and the other platforms have been collecting volumes increasingly. The DeFi technology stack has been more integrated as dApps combine layer 2 services with each other. Instadap. So we can see a diagram here of how it's been progressing since September. Now, what are the core benefits of DeFi? Now, before we talk about the benefits, I just want to let you know one thing with DeFi, which has to be very clear. So, for example, at the moment, in order to get a loan using decentralized finance on any platform, you do need to have a collateral, right? This collateral could be in Bitcoin, for example. So maybe you have 1 Bitcoin, you want to collateralize 1 Bitcoin. The current price today is close to 9K. So let's say you're collateralizing 9K, you want to get a loan. You won't be able to get a loan which is larger than 9K. So this is one of the limitations that DeFi currently has, okay? This isn't actually in this article. This is just something that I have asked around in DeFi projects, and they have confirmed that yes, this is a limitation at the moment, unfortunately, because they have no way to get the money back from that customer, right? Because the whole purpose of decentralized finance is hence decentralization. They cannot ask for your KYC, so they need to trust you by using that collateral. So you cannot borrow more than your collateral. So you can only borrow something up to 9K, right? In case you're not paying it back, minus the fees, of course, because the project team need to survive too, right? So they'll have some kind of small fee in place. And of course, if you don't pay back, then you will lose that Bitcoin eventually, right? There is some kind of contract in place using smart contracts, of course, which you'll pretty much have to sign using your ledger, right? Using your wallet. So it is an interesting concept, right? When we're moving towards decentralization and digitalization, we could be seeing more of these, but who knows how they're going to manage to get around this other aspect, right? To actually prove that that you can pay back that loan. I'm not sure, maybe like with a digital identity project like Ontology, for example, perhaps they could help in that aspect, so that if you have like a digital identity, then they associate a digital identity with your account, so you get a loan. But then you may argue that, okay, but then your identity is online, so how safe is it? Well, it is private, right, too, so not everybody can see that identity, but the project itself can, right, the people that are giving you the loan. So that is also something to keep in mind that could possibly happen. It is a possibility, but unfortunately that is one of the drawbacks. So now let's look at the benefits which we've got in this article here. So DeFi is built on top of a blockchain. Often the blockchain is referred to as a general infrastructure layer. Consequently, DeFi can be viewed as a cluster of second layer applications, and this allows DeFi to inherit the core property of decentralization. It is important to note that this only holds if the blockchain itself is decentralized. Fulfilling this precondition, the core benefits of opening finance are shared with the core benefits of blockchain. So we've got true decentralization, allowing censorship resistance, worldwide participation, regardless of social status. So that is important, right? Utilizing blockchain as a technological infrastructure allows relatively speedy and low-cost transactions, settlement, and immutability. DeFi applications generally allow that the user remains in possession of the private keys. This is referred to as non-custodial. In the blockchain ecosystem, the user is in full control of the money without a trusted third party. So that is important, right? Increased ecosystem transparency and thus price and market efficiency. Minimal principal agent risk as asymmetric information are non-existent, and the personal interests are governed by a transparent protocol. And finally, DeFi favors network effects, as a lot of innovation is generated by uniquely combining different projects in layer 2 or even layer 3. So do let me know actually what is your opinion on it so far when it comes to the pros and cons, because I am curious to get your thoughts on this. Do drop me a comment below. But in my personal opinion, I think that it's going to be another few years before we see DeFi really take off. I know that many projects are still working on it to try to revolutionize it, if that's the word. But the thing is that until the collateral can be lower than the loan, then we're not really going to see like a mass adoption of DeFi, in my personal opinion. So I do think that there's going to be a way at some point in the future using digital identity in order to prove that you've got a job, like just like with a bank, right? In order to get a large loan, you need to prove you've got a permanent job, permanent role maybe, right? Even if you're a contractor, maybe you need to have like a large amount of money, you need to prove some sort of income. So if people were to get paid in, say, a stable coin, for example, like they're doing in China, then perhaps you may see something like this take off in the future, and we may see DeFi taken off too and replacing the banking system. Now, wouldn't that be interesting? Or maybe even the banks themselves may look into this, right? Considering the pros that we've got with DeFi and facilitating the whole aspect of it, automating everything, right? Imagine that would be pretty cool. So yeah, let me know what you think. This is pretty much it from today's video. Let me know what you think. Don't forget to like if you enjoyed this video and subscribe if you're new. And I'll see you in my next video. Take care. Bye-bye.